Hey traders, it's John Fortune here with this week's weekly Forex Forecast. I hope you're having a fantastic weekend. Last week was a great week. Every single market we looked at and analysed closed successfully in the direction highlighted. That's 18 markets out of 18 which closed last week in the direction we were looking for. We are now heading into a pivotal 2 weeks in my opinion, and when we look at the economic calendar, you're going to see there are a number of events coming up which pose risks to financial markets. And I do believe the potential for a big risk-off move is there over the next 2 weeks. Okay, so a quick look at the economic calendar as always, but this is very important today to look at the economic calendar to understand what's coming up over the next couple of weeks. Last week we did have the rate rise out of New Zealand, and we also had the unexpected rate hike out of Canada. Now, it wasn't the fact that the interest rate rise itself was unexpected, but they hiked by more than expected. They actually hiked by 100 basis points. So those were the key pieces of data that came out last week, as well as US CPI data, which came out higher than expected, and this is going to force the Fed at the next meeting, which as you will see is coming up in a couple of weeks, to at the very least remain aggressive with their rate policy of 75 basis points and possibly even 100 basis points. I don't think they're going to go 100 basis points. I think if they do, the markets could be in serious trouble, but it keeps the pressure on the Fed to remain hawkish at the next meeting. Coming up next week, we do have some CPI data out of the UK and out of Canada, but what's important is the interest rate decisions. We do have one out of Japan. Unlikely they're going to change their monetary policy stance as it currently is, but Europe is expected to raise interest rates for the first time in a long time from 0% to 0.25%. So it may be the case that the euro pairs stay kind of corrective between Monday and Thursday, and it's important to know that because if that's going to be the case, you don't want to go too heavy on euro pairs and probably even dollar pairs leading into Thursday, because you may get caught up in markets which basically don't move. So just bear that in mind. That's the first thing to note, is that euro and dollar pairs next week, although I'm going to be looking at trading them, there are better markets to be trading next week in my opinion. And finally, the big one, in a couple of weeks' time, you can see we have FOMC out of the US, and this is the meeting coming up where the recent CPI print is going to force the Fed to remain aggressive and possibly raise rates by not just 75 basis points, but 100 basis points. Now, either way, what's almost for certain is that the Fed are not going to be coming into this meeting pausing rates or cutting them. And last week's CPI print makes almost certain that the Fed are not going to be pausing or certainly not cutting rates at the next meeting on the 27th. And after FOMC, very, very important, on the 28th, we have advanced GDP data out of the US. Why is this very important? Because the first quarter GDP was negative. And if we look at the Atlanta Fed GDP Now forecast for Q2 of this year, they are estimating a second quarter of negative GDP. That's a technical recession. And because of the current strong labor market in the US, people are arguing, saying, oh, it's not a real recession, it's not really a technical recession. But if you get a big risk-off move in the markets because they finally understand that a recession is on its way, you are going to see unemployment shooting up quite quickly. I really struggle to try and square the circle that is a second negative quarter of GDP coming out in the next 2 weeks and markets continuing to trade in a subdued and orderly way. I do think if we get this second reading of GDP that you could see a very big risk-off move in the market. So you need to be prepared for that coming up in the next 2 weeks. Okay, so let's have a look at the scorecards heading into this week. As I said at the start of the video, we had a fantastic week last week. All 18 markets closed successfully in the direction analysed. Coming into this week, the notable things from the scorecards are that the euro has weakened by -1 to a score of -2, and the Japanese yen has also weakened to -3 from -2. The New Zealand dollar has gone to neutral after the rate hike last week. That was the macro input which caused the New Zealand dollar to go into neutral this week. And so on a normal week, we would be looking at euro weakness and also Japanese yen weakness, because the best shorts you can get are currencies with a negative 1 month forward-looking score, which actually gets a more negative. Now, the only one thing about this is a weak yen is actually risk on and a weak euro is risk off. So we kind of have conflicting signals here. So do we go for the risk off or for the risk on? Well, we could look at both, but because of what we discussed in FOMC, I think it's the Japanese yen weakness which is likely to play out the most next week. And we also have, with the New Zealand strengthening here, that's also risk on. So we really have two risk on signals versus one risk off signal. And that's one of the reasons as well, which makes me think with the 1 month forward looking scores predicting a strengthening or a slight outperformance of risk on currencies, we could see that correction in the DXY over the next 2 weeks. So the markets I'm going to be prioritizing next week will be Swiss franc, Japanese yen to the upside. We're going to be looking at US dollar yen to the upside, and that's actually a very good dollar pair to be looking at next week because US dollar yen to the upside is actually a risk on currency. So you can get a risk on play with the DXY if you want to. And I would much rather trade US dollar yen to the upside than try and trade a counter trend move to the upside in euro dollar. I don't trade counter trend. I'd much rather take US dollar yen in line with the overall trend. You can also see the Canadian dollar with a score of +2 does mean that I'm also going to be looking at that as a potential risk on setup coming into this week. And we can also look at CAD yen to the upside. We're going to be looking at pound CAD to the downside, EurCad to the downside. And so pound and yen shorts this week, especially versus Swiss franc longs, US dollar longs, and Canadian dollar longs are my trading plan going into next week. Okay, so let's have a quick look at the individual currencies themselves, starting with the DXY. You can see we took out the target at the 108.73. And the DXY is a very interesting one going into this week because look at the previous rally we had in the DXY. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 days from the last low where the DXY has rallied. And we have coming up next week a European interest rate decision, and after that, the Federal Reserve meeting. I do think when you combine these things that there is most likely going to be a correction in the DXY over the next 2 weeks, leading into FOMC. So this is why we look at the economic calendar, because these events also have an impact on the markets. And if we take not next week, but the following week where we do have FOMC, almost certainly the dollar is going to be correcting in that week. And so that just leaves next week for the dollar. Do we rally a bit higher and then correct, or do we spend the next 2 weeks correcting? And this is why, although I'm interested in a couple of the DXY pairs, I'm not going to be taking too many positions in the US dollar, and I'm not going to be taking too many positions in the euro next week. And I do think if we are going to get a correction in the DXY, and why would you get a correction? Because everybody who has bought down here knows these events are coming up and they start booking their profits, and everybody else is waiting for those events to take place before big money comes back in. So the market just corrects. So if that's going to take place, what we could see over the next 2 weeks leading into FOMC are risk on setups actually working fairly well. And when we look at the scorecards today, you will see the scorecards themselves are highlighting some risk on moves such as the Canadian dollar and the New Zealand dollar versus the yen. So I am still bullish on the DXY overall, but don't be surprised if the DXY corrects for the next 2 weeks into FOMC. And for that reason, I'm only going to be taking the very best DXY setups if I am trading the dollar pairs. And heading into next week, that would be in the form of pound versus dollar and also silver versus the US dollar. Next is the euro. Now, really just the inverse of what we discussed in the US dollar. I would not be surprised. Maybe we come down one more first and then we start to correct over the next couple of weeks into FOMC. And what I would be looking out for is if we do correct into FOMC, we get a strengthening of the euro, a weakening of the dollar into FOMC, not just for some of the risk on moves to outperform over the next 2 weeks, but for FOMC itself, or maybe the Fed raises 100 basis points on FOMC, or we get that second negative print of GDP in that same week, and that actually catalyzes the next big sell-off in the euro and the next big rally in the US dollar. That's what I'm looking at, and I wouldn't be surprised if that takes place over the next 2-3 weeks. Next is the pound. The pound is still trending to the downside, and we're yet to take out target at the 1.1734. I am still bearish on the pound technically, and the scorecards throws up the pound as one of the best shorts. Next is the Swiss franc. Now, the Swiss franc is technically structured to the upside, but compare this to what we looked at in the dollar index, which is in a full-blown bull market. So technically, I am bullish on the Swiss franc, but not as bullish technically as I am on the dollar. Next is the yen. The yen continues this relentless sell-off, but I do think we could see that change if we get the right catalyst over the next couple of weeks. As it stands, if we are going to see risk on setups outperforming over the next couple of weeks as the dollar corrects, as the euro corrects, yen shorts are actually my preferred go-to play heading into next week. We took out the target last week at 0.007307. And I am now looking for further declines into the 0.007136 this week. I really like yen shorts this week. Next is the CAD. We came and took out the target at the 0.75740 last week. Going into this week, technically I'm still slightly bearish on the CAD, but if you look at it, it's really struggling to break previous lows with momentum, and we could actually see a snapback in the Canadian dollar. So I'm kind of neutral technically on the Canadian dollar. Next is the Australian dollar. We came down and missed the target just by a single pip at the 0.6685. It actually bounced at 0.6686. I am still bearish on the Aussie, but don't be surprised to see the Aussie correcting and strengthening over the next 2 weeks as we go into FOMC, if we're going to see the dollar correcting, as I think we have a very good chance of seeing into FOMC. And last but not least, we have the New Zealand dollar, still trending to the downside, but again, lacking momentum, and I wouldn't be surprised to see this snap back over the next 2 weeks into FOMC and have a little bit of near-term strength. But technically, I am still bearish overall on the New Zealand dollar. Okay, so let's look at the markets themselves, starting with crude oil. Now, crude oil has been a short highlighted in the video for the last 2 weeks, and crude oil has performed fantastically. In fact, it's been one of the best paying markets because it's been selling off 6, 7, 8, 9, 10%. We took out the target at 93.85. I do still like crude oil shorts, but if we're going to get risk on moves into FOMC because the US dollar corrects, I would not be surprised to see crude oil correcting over the next couple of weeks. So I am still bearish, but I'm a little bit wary. I'm just questioning whether we get a strong sell-off in crude oil before FOMC if the dollar's correcting. So I am looking for any bearish reversals in this market to take shorts, but it's not as good a market as it was in the last couple of weeks, in my opinion, if we're going to get a DXY correction heading into FOMC. Okay, so the first Forex pair we're going to look at here is franc yen. Franc yen is thrown up as the best market to be looking at next week, and this is my number one market. We have already started to break out, as you can see, of this correction, and we formed an inverse head and shoulders here, which is broken. We've got momentum. So any pullback next week in franc yen is viewed as an opportunity to look further advances, first into the previous high and then on to the 144.18. Next is dollar yen. Last week highlighted as a market to look, one of the best markets to look for long positions in, and we had a really nice rally taking out the target at the 138. Have a look at US dollar yen chart. This is potentially a problem here. You can see the distance between the next key area of resistance is the 140 to the 144. That is suggestive of a strong rally, a big fast move between those levels, because what that means is when I looked back on the chart, there was nothing but air between the 140 and the 144. So keep an eye on this market, because this is a little bit concerning to the upside if you are the BOJ. Any pullback in this market next week is viewed as an opportunity to look for longs once again into the 140.29. Next is CAD yen, highlighted last week as a good market for longs. We had really nice move to the upside. Any pullback in this market this week is simply viewed as another opportunity to look for bullish setups into the 107.15. And if we break through here, you can see once again quite a bit of air distance between the 107 to the 109.56. Next is New Zealand yen. Now, I like this chart heading into next week. This is a market I'm really going to be keeping my eye on, because last week we had the raising of interest rates, so there's a very good chance we get some follow through in New Zealand strength. If the DXY corrects, you're going to see New Zealand yen appreciate, at least in the short term, a risk on environment. And we've also just broken out of this inverse head and shoulders here. So I think there's a high chance that New Zealand yen continues up to the 86.79 and possibly further. So any pullback next week absolutely is going to be viewed as an opportunity to look for bullish setups in this market up towards the 86.79. Don't forget, we also have that strengthening of +2 in the scorecard. So we have some momentum for the New Zealand dollar on a 1 month forward-looking basis. Next is pound franc. I do like pound franc to the downside because the pound is highlighted as one of the best shorts outside of the Japanese yen. You can see this chart looks a bit squashed, and again, this is because this is yet another market which has nothing but air below the 1.196 in this case, or the 1.1496. And again, this is indicative of a potential fast move below this level. There are a number of charts showing this now, and this is another piece of the puzzle which is just suggestive. It doesn't prove anything, but it's suggestive of sharp or volatile moves which may be ahead. So either way, any pullback in this market next week is viewed as an opportunity to look for bearish reversals. I'm going to be looking down towards the 1.1496, and once we break through here, onto the 1.1119. Euro franc, we do have the interest rate decision next week, which is why the euro is not highlighted as one of the best. I prefer the Japanese yen versus the Swiss franc and the pound. But any pullback in this market next week would be viewed as an opportunity to look for bearish reversals into the 0.9775. Just remember that interest rate decision risk you have in this market next week. Next is pound CAD. We took out the previous target at the 1.5443. Any pullback in this market is simply viewed as an opportunity to look for bearish reversals down to the next key of support at the 1.5252. Next is EurCad. We took out the target set at the 1.30290 and bounced. Any continued pullback, and of course the deeper the better, I am going to be looking for bearish reversals, perhaps after the interest rate decision next week, and I'm going to be looking down towards the 1.2953. Again, not highlighted in gold. I prefer pound versus the CAD over EurCad. Next is pound dollar, highlighted in gold because if I am going to be trading the dollar, it's really either going to be US dollar Japanese yen or it's going to be pound dollar. Those are the two dollar pairs that I will be looking at trading if I do in fact decide to trade the dollar next week and the opportunities arise. I still prefer yen shorts heading into next week. Any continued pullback in this market, and again, don't be surprised to see this correcting into FOMC, but any pullback in this market is viewed either this week or next week as an opportunity to look for a breakdown and then further declines into the 1.1715. And the last Forex pair here we have is euro dollar. I did highlight euro dollar taking out parity last week, and we also took out the target set at the 0.9927. That was pretty much the low of the week in euro dollar. If I zoom out a bit here on euro dollar, you can see another market with a big gap between these levels here, suggestive of potentially running these fairly quickly. Any pullback, and perhaps I wouldn't be surprised if this was after FOMC, but any pullback is viewed as an opportunity to once again look for bearish reversals. I'm going to be looking down towards 0.9927 and then perhaps rather quickly onto the 0.9596. Okay, so wrapping up with gold, silver and Bitcoin, starting with the gold silver ratio, you can see we took out the target at the 92.97, which was also the previous high. I am still bullish overall on the gold silver ratio, so I favor silver shorts over gold shorts, although I am bearish on both. Next is gold, highlighted as short in previous videos, but not highlighted in gold because I prefer silver shorts. We took out the target at 1721.80. Any pullback in gold is once again viewed as an opportunity to look for bearish reversals down to the 1682.30. Next is silver. Silver has been a great performing market. We took out the 18.45. We started to pull back. It is highlighted in gold and it wraps up my overall three favorite dollar pairs if I am looking to trade the dollar setups, and that will be pound dollar, silver and US dollar yen. I will be looking at setups in all three of those markets, and if those setups materialize, I will be looking at taking trades. Any continued pullback is simply viewed as another opportunity to look for bearish reversals down towards the next key of support to the downside at 17.63. And last but not least, we have Bitcoin. Bitcoin is still a short in my opinion, but we had such a big sell-off that the market needs time to breathe. It has to pause, and that's exactly what it's been doing. I am viewing this currently as a big A, B, C correction. Any continued pullback, therefore, maybe we come up one more time into FOMC, and just like the other dollar pairs, we start to reverse from there. But any pullback is viewed as an opportunity overall to look for bearish reversals into the 16.492. So that is it for me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. Those of you who do that on a regular basis, thank you. I do appreciate you. I do see your comments, and without you, I wouldn't bother doing these videos at all. So with that said, I wish you all a fantastic weekend. All the best in your trading next week. The only thing left to say is take care and don't forget to trade safely.